All the faculty members and the students who have joined us for this webinar, Sustainability and Growth Post-COVID for Financial Institutions. And this is webinar 3 in the series of Amity PwC webinar series. Before I hand over the session to our speakers, I would just take you through their brief bio and I will introduce them. Mr. Nitin Jain is a partner strategy and digital financial services. Nitin has over 23 years of experience across BFSI in general management, sales and distribution, products, marketing, digital franchise, and channel management in India and overseas. He has led the strategic transformation of many banks, insurers, fintech players, and NBFCs. He has been responsible for charting the growth strategy, transformation plan, digital transformation strategy, and go-to-market strategy for large banks, fintech players, and brokering houses in the Indian subcontinent. He has also been responsible for strategy development for a large public standards body in India. He also has a rich experience of leading the turnaround of large companies from loss-making status to double-digit ROE. He has also been instrumental in setting up and building various businesses, including insurance, portfolio management, retail broking, asset management. He led the setup of a leading health insurance company and was instrumental in setting up banker relations with PSB, Union Bank, and Corporation Bank. He is a chartered accountant and also is certified in the domain of disruptive strategy from Harvard Business School. I welcome you, Mr. Jain, for coming on to this webinar and accepting our invitation, addressing our students and faculty members. And we also have with us Ms. Pragya Sri, Associate Director, Strategy and Digital Financial Services. Pragya has over a decade's experience in the financial services industry as well as consulting. Pragya has extensive experience in strategic initiatives across the financial services industry. She has led various projects in public sector, private sector, and emerging markets in the BFSI domain. She has also been instrumental in strategy and product development, channel management, business planning, and marketing initiatives for leading companies in the domain of capital markets, insurance, and banking. She has led various projects for clients in domains of strategy, business planning, footprint optimization, digital transformation, business process reengineering, go-to-market planning, strategic partnerships, etc. She holds an MBA degree in finance from IMT Ghaziabad and university gold medals in planning from School of Planning and Architecture. Ms. Pragya, I also welcome you to this webinar and thank you for addressing our students and the faculty members in this webinar series 3 of Amity PwC webinar series. So I also welcome my co-panelists, our senior faculty members from International Business School, Dr. Ajay Sidana and Dr. Namita Sahai, who will help me in moderating and also taking up questions asked by our faculty members. Our Group Vice Chancellor, Professor Dr. Gurinder Singh Sir, who has been motivating us to do these webinars in these unprecedented times and to bring the best of the industry to our students. He also says his, he expresses his thanks to all of you and expresses gratitude for being here and addressing our students and the faculty members over this particular platform. So I hand over the session to our two speakers. Please go ahead.
Can I have the presentation, please?
Is the slide visible?
Yeah.
Yes, the slides are visible.
Good afternoon, everyone. Can we move to the next slide, please? Yeah. So would like to keep the discussion, I would say, in two parts. One, what is getting impacted with this crisis, unprecedented crisis, what all of us have, and what is its impact on financial services sector. And at the same time, this is a crisis which has impacted a business a lot, but at the same time, what we personally believe is that it gives you a lot of opportunities in terms of reinvigorating your entire business and at near to long term future. So what we are discussing today here is there are 6 areas of intervention what we see in banking and financial services, wherein people can really relook at their strategy and look at the business again. Right. So let's start with those. I'll try and brief you on all of these 6 interventions, and then I'll hand over to my colleague Pragya, who can talk more depth and in detail in these areas. So let's start with number one, which is re-engineering the business continuity process. So what's happening today is that if you look at the market, the whole market is changing now. Most of the people have started working from home, and at the same time, what's happening is that if you look at the BFSI industry, most of us utilize outside vendors as well in terms of contact center or in terms of outsourcing services. They have also started working from home, and this is now becoming a three-tiered or three-layered uh, program, wherein it is very important to relook at your processes, relook at your quality, and relook at your compliances. And that's where people will have to, all the businesses in the banking and financial services will have to re-engineer the processes for new environments and implement stricter SOPs and SLAs. The second thing is that people have to relook at elasticizing their branch timings to spread the customer footfall, and how do they can redefine their ATM operations, etc., and write new SOPs in that direction, because that has become very important. Now there's no point for, at least in the near future, to continue opening your branches for those 10, 10, 12 hours, which we used to do in the immediate past. The third thing is that how do you review your entire business continuity planning and look at your financial health of all your vendors, because you're working with a lot of vendors. Whether those vendors are going to survive this crisis or not, that's a big question. So how do you really look at your entire BCP plan? Fourth thing, important thing here is that how do you rebalance the overall workload in terms of operational slides. So let's say if you have multiple slides, and how do you try to open or work from one particular side, and we'll come to that even more when we move to our asset light strategy. So these are the things which are basically, I would call it the first pillar of the impact and how do you manage your business. The second thing is about cost optimization, and that's a pretty large area of work which people will have to take it. Now, this is a time when you have to really look at your cost because the businesses are in trouble, but at the same time, you have to take it very carefully. In the past, when you've seen people looking at cost optimization, people have gone across the board cost, right? Now, let's look at 20% reduction in cost, or let's look at reducing 20% of our workforce. But this will not work, because the whole point is that this is a time of crisis, and if you just focus on cost optimization, there are greater chances when the economy rebounds, and which is going to rebound very fast, you will miss out all the opportunities. So there's a time to invest rather cutting cost. But at the same time, when you want to invest and when you are in crisis, where do you get money from? And hence you have to go for a cost optimization. And this has to be in very intelligent cost optimization. So what I call is you must separate uh, two kinds of cost: good cost and bad cost. So you should look at must have cost, and you should have nice to have cost. So how do I eliminate those nice to have cost? And Pragya will discuss more in detail what kind of cost we have, what kind of program restructuring we do, and what organizations should look at those. Right. The another thing here is that how do you renegotiate and all your contracts in this era? Go back to your vendors, go back to your landlords, and try to renegotiate your contracts so that your rapid sourcing can happen. So that's what the companies will have to relook at. The third thing in cost is very important, is that what kind of business should I continue? What are the products which make sense for me, which are giving me those kind of ROE or which are generating returns for me? Then having run of the mill the entire bouquet of products. What makes sense for me? I should keep only those business lines, those products, all of that. So that's very important. The third pillar of the entire crisis management is digital transformation. Now, all of us know that this has been the digital transformation journey has been around for some time back, right? But there's still significant dependence on physical and manual processes. Now, given that crisis, both stakeholders, internal and customer, are ready to get onto that journey. So, how do I really go onto this journey much faster? And this is I think we are going to spend maximum time on these two things. One is cost optimization, and second is digital transformation, how people can go on digital. Now, a lot of people talk about digital, but still the journeys are not complete. What exactly is digital? A lot of people talk when it comes to digital, they kind of uh, misguided or misdirected by saying digital is all about technology. But digital is not about technology. Digital is actually about building business strategies for digital growth. So the whole idea is that how do you use technology to enable your business growth? So the entire thing of digital transformation is about what do I want to achieve faster, cost-effective way by applying digital methods there, than just deploying a digital model or adopting a digital application. Right? So it's all about making business strategies for digital edge. That's what we call it. The fourth thing is about asset light operating model. And when it comes to asset light operating model, it is about how do you merge your lines or blur your lines of physical and digital model. Now, what's happening if you look at if you go 10 years back, almost about a decade now, BFSI have stopped looking or seeing walk-in customers in the branches. If you go to bank branches, the footfalls are not there. If you go to insurance companies, footfalls are not there. And in fact, if you go to the asset management companies, there's hardly any footfall. Not even a single customer goes to asset management company offices. So when you don't have those walk-ins coming to your branches, you have to go and sell to people in the market. Why do you need such large infrastructure to sell? And in this era, can you really utilize that and started looking at going to the customers and looking at your lighter infrastructure? Or let's say, instead of having your offices at high street, can you look at a by lane, back lane, third floor, fourth floor, go and try to save your cost, have your presence there, but at the same time, minimal presence in terms of infrastructure, so that you can move your people efficiently from those offices, but they essentially don't need to sit in the offices. So that's about the entire asset light operating model. How do you really make that asset light model and at the same time digitally transform the asset light model? So what happens is that you aid your entire physical workforce through your digital methods or digital enablement or digital sales enablement, what we call it. The fourth thing is about productivity. Now, a lot of people talk about productivity, and when the question arises, everyone talks about manpower productivity and looks at sales team, how productive they are. What we believe is the organization productivity is a significant area of intervention than manpower productivity. And this touches upon various functions and people across the board. So these are 6 areas of intervention we look at while addressing productivity. And when I say addressing productivity, it's not about, again, I'm reiterating, it's not manpower productivity, it's about organization productivity. And when it comes to organization productivity, you have to look at productivity of your frontline, you have to look at your productivity of operations, you have to look at productivity of your technology functions, you have to look at productivity of your platforms. All of that becomes a complete bundle of organization productivity. So first thing is, how do you better understand your workforce, right? So typically companies understand broad job responsibilities and activities in most cases, but they don't tell task-wise time and money spent. So most of the organizations do formal appraisal once in a year. Some people do twice in a year. But how many people measure productivity of their functions and people on an hourly basis or on a daily basis? So the whole idea is to better understand your jobs, roles, responsibilities, and their importance. The second pillar of productivity is embracing the platform economy. And there are two biggest example today we have is Airbnb and Uber, which are the two most valuable companies on the planet. Yet neither owns the primary physical assets used in their businesses. Right? So embracing the platform economy has a huge productivity benefits for financial institutions too. The mutual fund marketplaces have shattered the myth that asset managers have to manufacture all their own assets. So you can look at fund of funds where you don't manufacture anything, but you still have a larger platform. You're inviting people to invest, and you're running a quasi asset management company. Right? A peer-to-peer lenders have taught us that financial institutions can create effective business models without owing the financial capital as deposits. These business drivers their value primarily through what we call as beacon, which is behavioral, cognitive, and network capital. So it's all about using gig economy for speedier market reach. So how do you create a platform and try and do business without creating a balance sheet for yourself? The third pillar of productivity is how do you improve the workforce digital IQ? Right? So digitalization is an important aspect of improving productivity, but digital skills go well beyond just technical aspects. Like just having a knowledge of a particular language doesn't make sense. You have to have soft skills such as creativity, emotional intelligence, adaptability, and ability to influence and innovate should be developed in tandem, right, with technical know-how. So technical know-how is the base of your your knowledge, but at the same time, unless you emotionally understand the customer, you empathize with the customer, you don't create the persona for the customer, you'll not be able to go on a digital journey. The fourth pillar under productivity is bringing an agile mindset to the mainstream. So basically, how do we bring agility beyond technology to overall organization and use all that is all the principle of agility, which is basically Scrum, DevOps, all of these things. How do you bring them in real life in the mainstream of business to make your business more agile and more nimble to respond to business or respond to market as early as possible? The fifth thing was mastering digital labor. It's all about replacing human labor with digital labor that automate processes with robotic process automation, deploying machine learning, artificial intelligence, thereby increasing productivity and reducing cost. And the last thing about rethinking change functions, a lot of organizations wants to do all of these things, but they don't have those functions within organizations who can run this program. So a lot of time people create a program management office, but what happens? Nobody is able to deploy the top senior management in that program management office because they are all busy in this BAU, which is business as usual, and they deploy the junior people. So they do a strategy, but they deploy junior people there in PM office who are not able to carry forward their vision and the entire mission, and that's where the programs fail. So how do you rethink the entire change function? And the last pillar, number 6, when you see in the graph, is all about how do you reset your outlook, strategy, and plan, because the markets are changing and there's a lot of stress in the market, and especially when you look at this entire moratorium, which is now about 6 months' time. After 6 months, people have not driven their cars. How are they going to pay the installments? The businesses have not been clocking their numbers. How are they going to pay their installments? The interest which is going to get due altogether in the next period of time is going to put pressure, and this pressure will have repercussions in terms of businesses because the lenders will be in trouble. When the lenders will be in trouble, the refinancer will be in trouble, and the refinancer will be in trouble, then the entire process is going to come to government. So how can you really look at that, the entire strategy and plan going forward? So these are the areas which we think are going to create sustainability and growth for BFSI post this COVID-19. I'll invite my colleague Pragya, who will take us through all of these pillars in a little more detail, and probably then we can take up some questions. Thank you. Over to you, Pragya.
Thank you so much, Nathan. So, we discussed there are 6 areas of focus, and while I'll deep dive into each of these areas, the first thing that we have to bear in mind is that a situation like COVID, or if some of us who lived the 2008-9 crisis, any crisis that comes along brings with itself a lot of opportunity. And that's how we are going to be approaching as an industry, as consultants to the industry. That's how we are approaching the whole situation. However, before such approaches are put into place, there is an emotional quotient that the industry has. And therefore, each of the focus areas that we've identified actually addresses the emotional quotient of this particular industry. The BFSI industry is an essential industry, right? And the day it was announced that there is going to be a lockdown, there is going to be need for social distancing, the first emotion that came out for those which were essential services was anxiety. How am I going to continue servicing the customers while maintaining the social distance, while taking care of the employees, while also ensuring that the brand image is taken care of? And that is very critical. If there is a news outbreak that in a particular branch of brand A bank, there were 5 people who visited and all have been suspected of being infected with coronavirus. Now that's a huge brand dent, right? Now, keeping all of that in mind, it was critical, therefore, in the short and mid-term, to think about how do we make sure that BCPs, business continuity plans, which are part of documentation across all conglomerates, all companies, they really come to life and are so robust that they are able to answer situations like these. Most of us would have imagined a crisis to the tune of a war or an earthquake, but who could have really imagined a virus kind of a crisis? Right? Now, there are various challenges that the business faced because it was an essential service. It had to continue running and operating. The very first one being, how do you make sure that there isn't crowding in the branch? If today the real estate available in a branch was 1,000 square feet, within that 1,000 square feet, if there were 7 employees expecting around 20 customers at one point in time, Is that 1,000 square feet enough for ensuring the social distance? Is the gear, the safety norm in place? So that was the first challenge. The second challenge was that, of course, because customers were going through the same anxiety. Will branches remain open? Will I get enough cash? Is there enough cash at home? Because all said and done, despite all digital interventions that the government of India has been trying to bring in our lives, we still continue to be a cash-driven economy, and therefore the demand for cash. But no one wanted to walk into the branches at that point in time. In fact, even today, we will have experienced ourselves in our lives that we prefer going to the ATM more than we were going to the branch ever, and therefore a higher demand. Now, for the banks, that have meant how do you keep replenishing the whole cash value chain in order to make sure that the customer is not unserviced? Because this is really the time when customer experiences are made or broken, right? The third element was with respect to how do you make sure that the service level agreements that you have with various vendors, so let's say the cash deposit machine, or there is a vendor which is doing data entry, or a call center which is providing certain services to the customers. Now, of course, all those employees of those vendors are also facing the same situation. At the same time, it is very critical to ensure that the customers are not disserviced. So how do we make sure that those SLAs which have been put in place continue to be honored? Now, there is always one line of defense that is built in. But for a situation like this, where availability of manpower, the ability to manage systems remotely is challenged, how do we make sure that the controls are not one line of defense, but multiple lines of defense and fallback options? uh, Linked to the same point is the vendor performance aspect. Now, vendors are responsible for nearly 30% of services provided to our customers. Now, let's say there is a collections vendor. Now, if the collections vendors employees are not being able to go to the various MSMEs to collect the EMIs, or in case even the moratorium was announced by the government, in case that needed to be communicated and signed off, if the vendor is not being able to perform that service for us, how do we make sure that the cracks do not come in? The last but not the least, owing to moratorium announcements, owing to confusion around whether interest would be applied or not, whether it is a check-in facility or an auto opt-in, there were numerous queries that popped into the customers' heads. There were also situations that customers were and continue to face, where their, let's say, debit cards were expiring in a particular month, or their credit limits needed to be enhanced. Now, all of that leads to a lot of volume getting added to the call center. How do we make sure that the same call center with the same strength is able to efficiently manage the new volumes? Because for the call center, the number of minutes spent per query is inversely proportional to the experience we are giving our customer. Now, all of that being challenges, the various touch points for the customer were branches, ATMs, call centers, and the operations desk, where people would typically land up with queries if they were not serviced by branches, ATMs, or call centers. Now, what would be the typical areas that for process re-engineering or business continuity, process strengthening, or water tightening would be important? Now, for branches, because the same 1,000 square feet has to house the old number of employees, it is not practically feasible to overnight go and change the location of the branch. Though in long term, we do believe that as more and more people pick up digital channels for servicing and self-servicing, this will become an area of opportunity for the banks to go and position themselves at a far-flung outskirt area in order to bring down costs. But that I will leave aside for cost optimization as an angle. How do we make sure that the office hours are made flexible, but without compromising on customer? One small example is senior citizen servicing. Now, we've often heard about senior citizen servicing being at the doorstep because they do not have the ability to come to the branches often. At the same time, if we move to tier 2, tier 3 towns, we also have seen this very predominant phenomena that it is actually the senior citizens who typically go to the bank branches more frequently than the millennials and the Gen Zs. The reason being, they still rely on their passbooks, they still rely on their checkbooks, they still believe in the connect with the branch manager. Now, how do we make sure that this vulnerable segment of the society, which is our customer section, is addressed separately? Do we look at having segmentation across all the bank branches with severity zones? Now, we have containment zones, we have the red, amber, and greens. Now, however, what we've not seen happen so far, and something that has been an area of concern, is branch segmentation in line. How do we implement an appointment only? Why can a bank branch not be as good as a hospital's OPD? Because all that we are trying to do here as well is take a particular service. And typically, to visit a bank branch, most customers actually have a preferred time. So, how do we make sure that this customer behavior is married to the challenge of having too many people into the branch via an appointment only mode? Those are certain areas of focus that the BFSI sector is looking at as far as the physical branches are concerned. Now, ATMs is a unique example of a phygital adoption. So we've all adopted ATMs provided they are in vicinity. We do not still believe ATMs are our one-stop solution for servicing. How many of us have used the ATM to click and say, I want an insurance product? Hardly any, right? We all look at ATM as a provider for cash. Now, given that and the current scenario, when the two marry each other, the big challenge is how do we make sure that people are distancing themselves? Many ATMs in the past, owing to cost optimization and a good strategy, we've got a couple of machines or 3-4 machines in the same physical premise. How do we make sure that a standard operating procedure is in place, not only from physical safety perspective, but also virology perspective? How do we ensure that for simple requests like balance check or a mini statement, the customer does not come to the branch and adopts mobile banking? So all of us who are on this webinar, we may think this is a very small point, but a quick data point. One of the largest public sector banks in India, having over 12 crore population, has only 2.5 crore population having a debit card. Now, if nearly 10 crore of their customers don't have a debit card, we can imagine how many actually even think of doing a mobile transaction. Minimizing the ATM downtime, of course, is a key focus area, which is leveraged as a selling point by taking care of the cash value chain. Also promoting digital transactions via UPIs, via integrations with various fintech players has been on the cards and is going to become all the more important as we move forward. The second area, therefore, of concern around ATM operations is actually a huge opportunity as we see. The third area of customer touchpoint being the call center, where customers have been calling in order to get their queries answered, which is inundated with many types of queries. The use of bots and IVR therefore becomes very critical. How do we make sure that basic queries, which would typically form 85 to 90% of the inward calls, is taken care of by automation? Also, how do we make sure that the employees of these call centers, their goals are realigned to handling larger volumes yet to the satisfaction of the customer? So this is an area where most people tend to overlook the customer experience, and we truly believe that if that happens, that particular organization is looking at losing customers as soon as this lockdown scenario or the virology advancement comes in. As soon as we have a vaccine, these customers who were dissatisfied in this time of crisis are definitely going to move out to a competitor. Moving further, looking at internal operations. Now, this is something we as consumers hardly get to see, but is what is the backbone of the industry. It is critical to make sure that all the technology enablement to allow people to work from home, allow cross-sectional, cross-functional teams to interact with each other, and also ensure that all sorts of documentation is taken care of in a remote working scenario. Now imagine a home loan which is applied for and the underwriting lead who's to check for the risk parameters is not being able to access 100 pages of the sales deed. Now that itself is such a small challenge and yet a huge showstopper. How do we make sure that the load balancing happens and that load balancing takes care of employees who are on minimum wages or low wages and they are incentivized to take care of more and more work that is coming their way? And last but not the least, how do we make sure that the physical premise of the operations center of the RSCPC, as we know in the public sector domain, is taking care of the employees' health as well? With that, I move on to the second pillar, which is cost initiatives. Now, this is, as I was talking, there is an emotion quotient that is involved, and this is an area of fear. Every CFO, who was interviewed in April of 2019 by PwC, 70% times said that cost is going to be an area of concern for them because no costs have come down. If anything, the top line has come down. And if that happens, the CIR, of course, is under stress. With CIR under stress, there is going to be a magnitude of problems that get built in. I will not delve too much on the problems that ensue costs are not taken care of, but we will talk about why focus on the cost is a very critical element. This is a time of opportunity. This is not a time where we say we will shut the branch. This is a time where we will be looking to say, how do I reduce the cost to give the same level of experience and service to the customer? And the challenge is that the top line is compromised. With moratorium coming in, banks are taking the stress of the economy. With MSME sector, the corporates also now following, already waving the white flag of surrender at certain places. The economy is under stress, and with that stress gets built the pressure on the interest. The interest income that the banks are earning, which is the backbone of their total earning, that does get compromised. At the same time, the fear or the provision that needs to be created of future stressed assets is also going to add to the cost and the bottom line consequently. Now, even if, let's say, we are operating at only 30% of the bandwidth that was earlier being done, the cost is 100%. The employees have to be paid, the rent has to be paid, the cost of running central air conditioning remains the same, and so on and so forth. And at the same time, there is additional expense which is being incurred on the safety and hygiene. Now, a lot of companies have looked at how to replace centralized air conditioning with local air conditioning, because there is a fear that airborne could be tomorrow's reality of COVID, though we still await WHO's guidance on the same. Now, having said that, these are the challenges. The silver lining is that, typically we believe that public sector banking has been laggard as far as adopting all new initiatives in the sector are concerned. And a very positive change that we've seen in this scenario is that within a month of this coming out, all public sector banks in line with ministerial thought process have started to look at what were the wastages in their costs. Typically, costs, we believe, and this is coming from a very well time-tested framework called FFG, Fit for Growth, which is a proprietary PwC model. We typically break the costs into four parts. The bare minimum essential to have, which we cannot do away with. The second one being that which we need to run and compete in this market, which is table stakes. The third being essential ones, which are critical to make sure that all compliances, regulatory aspects are taken care of, and the gaps, which we can fill via cost optimization. Now, let's look at the areas of focus. The corporate back office, customer service, procurement, information technology, and marketing. These are various areas that we believe are going to have a huge opportunity to optimize. How do we make sure that nearly taking off projects, as far as the corporate was concerned, are optimized and are dovetailed into cost optimization strategy? How do we identify opportunities to cut down the footprint? How do we make sure that back office is automated? And automation necessarily is not an investment only. Automation also means making sure that the delivery is important and SOPs and SLAs are taken care of. How do we make sure that digital processes, which are non-human processes, replace manpower? And this manpower is productively deployed across various other areas of business. How do we make sure that we streamline the procurement process, renegotiate contracts basis the current timing? How do we make sure that information technology spends are giving the adequate ROI to the industry? And of course, look at all marketing aspects are now moving away from only physical and part digital to heavy digital? How do we make sure that the cost of acquisition comes down for the customers who are yet to be onboarded? Now, with all of these, we typically believe that cost optimization initiatives are not a COVID-19 inflicted situation. In fact, it has been a huge opportunity area pre-COVID as well, and will continue to remain at the forefront of important initiatives that organizations will have to undertake. Moving on to the third pillar, which is the digital transformation pillar. We've heard and talked about it over the last decade, and we've all thought of digital transformation as digitization. Now we are actually staring at a time where digitization is trumped by digital transformation. The need of the hour is not to digitize what happens physically, but to reimagine how the customer experience and employee experience can be brought in to make sure that the connect with the organization does not go away. The very first element is, however, looking at what are the bottlenecks. Today, there are many intermediate physical and manual processes which become a challenge to a holistic digital experience. Therefore, the need is to not only digitize the front end, but also digitize the back end. And there are going to be a lot of levers which are already available in the market and bring the plug and play solution for all of us. Artificial intelligence has been around for a long time, and bots, IVRs, etc., have been powered by AI. Now, how do we bring AI into processes as well? How do we enhance employee productivity by making sure that the employee is also looking at elements that are required as far as human intervention is concerned? With this work from home model coming in, this is a very critical piece of as far as digital transformation fundamentals are concerned. How do we make sure that the collaboration that was physical in nature, which was branch based or maybe a call center based, how do we make sure this collaboration is maintained in a very digital way? There have been innovations around water coolers being digitized and that experience being given to employees. Those are very critical to keeping the employee morale and productivity up. How do we also look at new partnerships? A, a company that was a fintech organization or a new age NBFC and was a competitor to the core BFSI sector today is a complementary strength. How do we make sure that they partner together and the industry comes together to service the customer in a holistic fashion? How do we also make sure that digital acquisition, which has been believed to be a area of interest only for metropolitan areas, is able to penetrate tier 1, tier 2 cities and bring down the cost of acquisition for the organization? Also, how do we make sure that all of this, while it is happening, remains secure? There have been enough and more threats around the cyber security aspect. And this is an area of immense potential as well as concern for organizations as they sprawl their digital footprint. How do they make sure every nook and corner of the architecture is protected? The fourth pillar that we often talk about is making ourselves asset light as we move forward. Now, this comes from the emotional quotient of having uncertainty of the business as we move forward. There have always been uncertainties, there have been disruptions. There was the dot-com bubble, there was the real estate going down at the end of the first decade of the century. There has been a corona, and at the same time, there have been pressures from competition mushrooming at various edges of the BFSI sector. Now, with all of that, we need to make sure that the challenges that we today face around very few people walking into the branch, very few people actually making use of the digital assets that have been brought in. So a very classic example is one of the leading public sector banks at one point in time had 11 mobile applications. Now, all of them take a lot of effort as well as money to build. How do we make sure that the return on investment is on the horizon when we start planning? And also the key cost ratios like ROA and the NIMs, which are under stress. How do we lighten that stress by moving to an asset light operating model? Now, an asset light operating model, as the name suggests, it marries both cost and digital transformation that we spoke about in the second and third pillar. But it moves a little beyond. It takes it to the next level by seeing how can we optimize the real estate. Is it necessary? Questions, that CFOs and business heads are asking are, is it necessary to have a branch on the ground floor? Can the branch be on the second floor where the rentals are lower? Can we have movement for the branches from a high rental location like a cyber city to maybe a lower rental location like a sun city, which is as accessible for our customers, but at the same time requires lower support and maintenance cost? And therefore, how do we bring upon a better ROA for the customer? At the same time, digital assets which are being developed, how do we make sure that those adoptions are handheld? Customers who are wary of digital will continue to remain wary till somebody handholds them and helps them come on the mobile app, helps them do the first transaction. So how do we make sure that asset light assets that are developed for our customers are adopted? How do we make sure that these assets also transcend boundaries and reach our employees so that the employee satisfaction and morale goes up? The BFSI sector is often touted as the dark sector as far as employee retention is concerned. With typical industry attrition of around 3 to 4% per month, it is very critical, therefore, that we are able to, while move to an asset-light structure, at the same time, leverage this asset-light structure to give a higher employee satisfaction score to the organization. This also is directly linked to the productivity of our employees. If the employee satisfaction goes down, it has been proven time and again by various human resource studies that the productivity directly goes down and exponentially so. It is not a linear drop in productivity, but a waterfall drop. Also, the last element around the asset light is around looking at what actually is core to us. What can be done by somebody else who's a specialist at this? So while the call center boom has been there for around 2 decades, what more can of the BFSI sector be outsourced and thereby reduce the burden of taking care of certain SLAs and SOPs from the organization and convert it into an SLA, thereby reducing also the requirement to grow the manpower as well as digital assets. With that, I will move on to the fifth pillar, which we've oft touched as we spoke about the 1, 2, 3, and 4, productivity. Productivity, so far as Vipin was highlighting, has been looked at as manpower productivity. And now it needs to be looked at from a different lens altogether. It has to be looked at from the organization lens. It is not about various leaders and departments anymore. It is about the whole machinery coming together and delivering. At times, a lot of cost, inefficiency, and therefore loss of productivity gets built into the ecosystem because the handoffs are not clean, because the ownerships and responsibilities overlap. And this further adds to the stress of the employees, of the ecosystem, of the leaders. Now, the key challenge is that there is a lower risk appetite that the customer has today. So for all frontline staff, if there were 10 customers, prospective customers who were willing to take a loan, today there would be around 6. Now that leads to stress for this employee at the front end. At the same time, for people processing at the back end, the work from home, new equation that they have to live with versus the on-site experience they had, this adds to the stress. The numerous meetings that get added, the inability to adopt the digital tools that the organization would have bought, that adds to stress and lower performance. And all of this gets coupled with systemic challenge of having lower access to supervisors, lower access to mentors, having connectivity challenges. And these challenges are not very sector agnostic. These are experienced across all sectors, whether it be BFSI, FMCG, the call centers, all these sectors have been experiencing these challenges. What is important, however, is that productivity of the machinery of BFSI to work as a whole has to look at 5 areas of focus. And this interlinks with the business continuity and the processes. It is essential to be able to segregate between the essential and non-essential processes. The essential processes, which are physical proximity bound, there is no solution but to have a safe environment for work where people do come in and work. Those essential services which can be fulfilled digitally, how do we make sure that we completely eliminate the need to walk into the branch or the operations center for the employee and ensure productivity remains at the same level. Those which are non-essentials, how do we make sure that we outsource and still ring fence the quality and strict adherence to SLAs to make sure productivity of the organization is taken care of? Now, this has to therefore transcend the boundary of operations teams and business teams and move to the organizational boundary of customer centricity. The second area of focus around digitization has to also look at the non-value add elements in various processes, various products, and see how do we deploy non-human digital labor. And with that non-human digital labor being deployed, how do we free up the bandwidth of the human labor to be able to do more productive and value add services for the customer, for the organization? Now, in this new environment, a very debated aspect has been, should the KRAs and KPIs change? It is essential to look at each KRA and KPI to support the new environment. If the cost optimization exercise is under play, if digital transformation is being looked at, in order to adopt these, it is very critical that the employee is given an opportunity to upskill. At the same time, the employee is told that it is a key result for the employee to therefore make sure it is critically adopted, and also change management takes place in a faster manner. The liberty of change management happening over a few months is no longer with the sector. And it has only been fast forwarded by COVID-19. It has always been under pressure to adapt and evolve faster than the NBFCs, than the fintech players, and also non-fintech players, non-NBFCs. Interestingly, the biggest seller of insurance in this country, in a very guarded fashion, if I may say so, is not an insurance organization. All of us, when we buy our phones, we go ahead and take extended liability coverage. Now that, while not covered technically under insurance, is something that has trumped all other forms of insuring risks. Let's not look at the data analytics area as an area of focus. It has been an area of focus for a long time, however, has acted only as a silo machinery. It is critical now that as we take the productivity levels up and set ourselves higher benchmarks, it gets weaved into how we operate. How can we support the frontline person with various platform leads? How can we support the backend folks with analytics around how to do things fast forward in a faster fashion? How do we also make sure that effort leakage that would have otherwise come in a physical process is taken care of by plugging in information analytics? How do we also make sure that robotic processing comes in? Our PAs have been known to reduce the effort while also throwing great insights for us to refine our business models. And last but not the least, as an area of focus is the communication. How do we make sure that all stakeholders, whether internal or external, are being communicated to in this area, in this time of crisis, via digital as well as physical means? The onslaught of digital medium of communication can tend to be quite overbearing for employees as well as customers. And in such times, the emotional quotient tends towards being a feeling of being orphaned. How to make sure that the leadership messaging is intense, is reached and absorbed by each of the stakeholders to make sure that the connect remains. And with all those, it is critical to now review what we had set ourselves to achieve. We've seen a lot of memes moving around about how, as a civilization, humans had thought 2020 would look like this. And yet here we are in 2020, looking at various other challenges, but nowhere near what we would have envisaged in a 2001, 2002. Now, therefore, it is very critical to make sure that we reset how we look at the strategy, how we look at the plan, how do we reduce our risk exposures. At the same time, how do we exponentially look to leverage our current capabilities to be able to reach the customer in the right way? And the four critical are going to be customer, new markets, partnerships, and resilience. Any industry that has reached from mature to different stage has reached there because it was not able to reset its plan. And therefore, it is very clear for us to make sure that the customer strategy, segment, product, partnership, and resilience plan is not looked at from singular lens of what we do today. We have classic examples in the e-com sector of the likes of Flipkart starting from being a book purchase portal to reach where they did. The ability to evolve and to transcend sectoral boundaries to service the customer is very important. We also where the low-end camera market went with the advent of mobile phones. To avoid that and to avoid becoming a manufacturer and to continue remaining a core service provider, it is critical that BFSI sector looks at the customer markets and partnership with a new lens of being complementary to each other rather than competing to each other. And that I come to the end of our presentation. Very happy to take questions.
Thank you, Ms. Pragya and Mr. Jain for giving such a detailed and insightful presentation. We have many questions which have flown in from our students and our faculties. One of the questions I'll take up and then I'll hand it over to our two panelists. You spoke about digitization and the return on assets on digital assets. What I want to ask is that is ROA higher in tier 1 cities compared to tier 2, tier 3 cities, specifically in the BFSI sector?
So, Gaurav, very serious that as far as ROI is concerned, whether it be BSI or it be other sectors, there has been a challenge in terms of being able to actually realize ROI which has been envisaged. What typically happens is within 3 to 5 years, technology advancements come in, there is need to keep up with the rest of the market, there is competition coming in, and with all of that happening, there is a compelling reason to go ahead and invest further as far as technology is concerned. And therefore, ROI, which has been myopically looked at till now as ROI on the digital asset, has to change to ROI coming from a business angle. What did the digital asset actually bring in terms of customer experience? What did it bring in terms of acquisition? How many times could I lower my cost by because I got a particular digital asset? Those are the vectors we need to start tracking as part of ROI of digital interventions, rather than it being an ROI which looks at longevity of that. So that's very key. Happy to take a discussion on this as well. If there's any particular thread you have in mind.
Thank you, Pragya. Now, sorry, you want to add something?
To add to your question, I'll tell you, there's no specific measurement for rural and urban in terms of digital ROI. Yet it is being said that it has more in urban areas, and which it will be. But the whole idea is that what kind of service you are rendering on digital. So let's say if there is an agri finance company or there's a bank which want to do something in agri and they try and develop something and they release that solution in the market, obviously they will have a rural ROI much better than the urban ROI, right? But overall, the consumption of digital assets is a little more in urban areas as compared to rural areas.
Thank you, Mr. Jain, and thank you, Ms. Pragya. Now I'll hand it over to our two co-panelists, Dr. Sahai and Dr. Sadhana, to ask the questions which have been asked by many of our students and faculties in Amity campuses in India as well as abroad.
Thank you, Gaurav, and a very good afternoon to Mr. Jain and Pragya, and thank you so much for the wonderful, insights that you've given into the, the actions, the challenges, and the steps that the BFSI industry is going to be taking. Now, when I saw your topic, sustainability and growth, so the one thing that really struck me with the sustainability that, whenever we talk of sustainability, this topic of poverty, eradication, job creation always comes in. So, taking a cue from there, I just want to know that the financial inclusion, which is a very, very important theme, that, we have been really focusing, which is, been there before COVID also, and it has been, a lot of initiatives have been taken towards it. So what is the BFI industry, really working on for, towards digital financial inclusion? So what are some of the steps? Because, again, you're talking of the BPL group, you're talking of the unbanked population. So post-COVID, what are the new challenges that you would be facing, towards this digital financial inclusion? That is my first question. My second question is about the digital communication challenges. We can understand, that of course, digitalization is very, very important. Technology is a big enabler. And but the kind of experience that the wealth management industry, if you're talking about, was having, the relationship managers that we're having, that face-to-face experience with their clients will be missing now. So how do you really, work on boosting that client's confidence, when you are not able to, any action in particular, you've been working on, and so that the customer confidence, the client confidence is maintained. That is important as for business continuity, as you've talked about. And the third and the last question, because I know that time is very less, is about the work from home and the the cyber risks, the cyber security issues that are there. So this is something which is very important, because if everything has happened, happening, from work from home, and then it's so digital. So there's a huge risk of the data, being stolen. So we are still not the cyber laws are not very strong here. So if you could just throw light, on these these aspects.
Sure. So thank you for these questions. I'll start with the last one. And before I start, I want to put a caveat that everybody thinks that this COVID has become end of the world and we are all going to move from home. Right? It's not going to happen. And at least I personally think that it's not going to happen like that. Maybe 2 months, 3 months, 6 months more, 1 year more, not more than that. We're going to go back to that situation, and human memories are very short. So we are going to go back to our normalcy, right? The whole idea is that is why if you look at the perspective we presented is all about long term, that there is a trigger, right? That trigger is has given us a chance to initiate certain journeys. Let's say digital transformation, right? So the consumer was not ready for digital transformation. So 3 months back, when I told you a rural customer to come to maybe draw money from ATM, he wouldn't do that because he thought that going to branch is much easier. But you see, in last 3 months, people have started using ATMs, right? Because they are now pressurized to use that. So this is a good signal to use, and that's why if you look at our entire solution, what we are talking about, that the market is now, the customer is receptive to all these kind of solutions, right? So this is the right time to push all of that. So coming back to your questions, number 3, which is what about the cyber security and all of that, we think that there are certain services which have run fantastically well in last 3 months working from home. So people have started thinking in that direction. Can I move those services back to work from home culture, right? And not 100% can be moved to work from home, right? But whatever you are able to move to work from home situation, probably they will move. And there is a lot of work which is happening in the cyberspace. And you see a lot of solutions now. People have started recording screens, people have started recording movements, people have started recording only those kind of data to be given that. And a lot of people have started restructuring data in a manner that even if I were working from home, the data which you try to steal from the system will not be usable to you, because the data is cut out into so many pieces that to connect it, probably 3-4 people will have to come together and put it in a reasonable format, right? So those are the solutions which are available in the market. That's number 1, right? The second thing about the trust deficit, and that is going to be there. Yes, their concern is valid, but I'll tell you what happened is that this market is kind of spoiled by BFSI industry. You're talking about wealth, but wealth in very loose term in India. People talk $5 million accounts also as wealth, and people talk 50,000 also as wealth, which is a big misnomer, because there is a mass affluent, there's a wealth, there's a private banking, and there's a private client. There's a lot of range in that, all of that, right? And we have kind of spoiled the culture of the country by going to the customer's home for even ₹1,000 SIP, right? And that's where customer expect us to be at. And that is what I talked about as a light model, which is a wrong model. Probably BFSI in India has developed. The whole idea is that I should not go and meet customers which are below a particular level. And now what happens is that ultimately this entire social media and the non-financial services, which have gotten into this video calling and all of that, people are quite comfortable, right? Talking on this and building a trust. I'll give you a classic example. One of the banks in India, IndusInd Bank, let me name out that bank. IndusInd Bank, 8 years back, started video calling for their wealth customers. It didn't work at all. It was complete flop because the customer was not ready to come on a call. So when I spoke to 2, 3 customers, he said, "You are sitting in your tie, in your suit, in your office. You are comfortable talking, right? I'm sitting at home. Why should I come on camera?" But now that is not the culture, right? Now everybody, all of us have got into that. People have started coming on camera. That thing has gone out in last 3 months because for whatever reason, first 15 minutes we did not come on camera, but then we thought it is going to be for a little longer period of time, right? So that inertia is going out, and that's where I particularly see that this the combination of maybe a lesser physical visit. You cannot eradicate that physical visit. If I was visiting you every month, probably people will start visiting once in a quarter, once in 6 months' time, but they will still comfortable doing the calls in that way. But the third thing was financial inclusion. And there's a lot been done by government, there's a lot been done by public sector banks and private sector as well, which is about this Jan Dhan Yojana and Pradhan Mantri Bima Yojana, all of that. That's happening in that, and most of them are on digital platforms. If you look at your overall Arogya Bima, which is the Ayushman Bharat, which is completely on a digital channel now. Right? So a lot of things are moving digital, and that has also happened because we've been able to digitize our entire the UADI, which is Aadhaar, on digital platforms. So that has kind of pushed a lot of stuff on digital. Otherwise, it would have a little difficult journey for financial inclusion per se to go on a digitized model. But you have to reach to masses, and you can reach only through digital platform because reaching physical is getting very difficult and getting very cost. Expensive in that sense, and that's where people are getting into digital model now.
Thank you so much. Thank you. Well answered. Over to Gaurav and Mr. Sudhana. If there's any more questions, because I know we are running short of time.
Yeah, yes. We are actually.
Yeah. So, would it be okay if we take one final question, Ms. Jain and Ms. Pragya? Sure. So, Professor Dr. Sudhana, if you may please ask the final question.
Yeah, thank you very much, and a very nice presentation from both of the distinguished guests. My question related to the sustainability and the growth again. Around say a decade before, when the mall culture came, around 10-15 years before, we had again a question regarding the sustainability about the small business venture. But again, down the line, at the time of the COVID, again query comes out it, how will the business be as usual, or it will be impacted after the post-COVID in the accordance with the loan requirement, and what would be the technology of the future will be required or will be work for the financial institution in terms of the sustainable management?
No, so sir, your question, if I understand correct, is it regarding the financing of those smaller player in the market or their sustainability in terms of overall business model?
Overall business model, sir, how it will be changed, or either it will be as usual?
No, it will change. It's not that it would be as usual, but if you look at those smaller businesses, again, it depends on sector-wise how they are impacted. There are certain sectors they have really done well. So if you look at especially the grocery and the medical market, they earned more than what they earned in last 1 year, right? Because in the last 3 months only that thing has really worked well. Yes. At the same time, if you look at the travel business and if you look at the other hospitality and leisure and all of that, they have taken a big beating. But the question around that is government has also come out with basically loan scheme. We have seen that the entire 20 lakh crore package which PM has announced, about almost about 3 lakh crore, which is 20%, is being specifically made available to MSMEs. And when it comes to MSMEs, if their loans have been good till February 2020, they can avail 20% more on that. So I think government is doing some work there. There's another thing which RBI has announced about 3 days back, launching a special purpose vehicle wherein all the banks and the financial institution can, or NBFCs can securitize their portfolio and keep it parked for some time there for short-term liquidity. So I think people are trying to address that, but yes, there is a challenge because, and this challenge will grow when you start looking at the numbers of January, February, because what will happen after 6 months, you have a 90 DPD period which will get over by the month of December, and then the cracks will start showing in the system. And that's where you'll see that there will be a lot of pressure on NBFCs. They will not be able to basically take money from banks, and banks will also be under pressure. There will be some pressure which will get built up. I'm sure good businesses will still be able to get finances in the market and sustain. But yes, there will be some businesses which will be in trouble for some time at least.
Thank you, sir. Thank you very much.
Thank you. Thank you so much.
Thank you. With this, sorry, you were saying something.
No, thank you very much.
All right.
Thank
So
you.
with this, we conclude the webinar 3 in our Amity PwC webinar series, and we thank all the speakers who have been with us since morning, and a special thanks to Mr. Jain and Ms. Pragya for this wonderful session. In between, while the session was going on, Dr. Gurinder Singh, our Group Vice Chancellor, called in, and he could not join this session because of other meetings, but he has given his compliments for this entire day. I think it has been wonderful sessions. The third session, the 3 sessions in one series have been great, have been enlightening, and I've been getting feedback from our students and our faculties over chat, over messages of how wonderful these sessions are and how well taken it was. So we thank the entire team at PwC and all the members of our industry interaction cell for making this happen. It was truly an amazing day to have such brilliant speakers, such luminaries from PwC. And thanks to our IT team, without which that could not have been possible, and my co-panelists for those questions and summing it up so beautifully. So once again, thank you to Mr. Jain and Ms. Pragya, and to all the other speakers of PwC who were able to join us today.
Thank
Thank you
you.
very much.
Thank you so much.
Thank you so much.
Take care and stay safe.